There we go. We're back.
Evolving tariff policy.
So we're now collecting.
Come back down, like I said.
The government, federal government,
Hopefully realize for the
good
15
chunk of
close
revenue,
now.
$300 billion a year pace. And the question is, who's paying that? And the candidates for
We're back
paying
now.
that, those tariffs, would be the exporter, the foreign exporter, or someone on our shores. It could be a company or a retailer, or someone who's using the imported product to manufacture something, or the end consumer. And so so far, in its incredibly early days, it doesn't look like the overseas exporters are carrying the bulk of it. It looks like it's that middle group. It's retailers and it's importers, and they're not passing along.
Yeah, this stuff's so boring, man.
That much of the cost. So the actual effects on inflation,
you'll notice, like, you're
it's really not,
if you're drinking just like a little bit, your trading is fucking horrible.
I mentioned
right?
That core PCE inflation is 2.9%.
Because you have no emotional regulation. You're not able to process your thoughts as easily, right?
So it's not the big factor. It's not a big inflationary thing, but
it's
it
a
is
good day, yeah,
something
bud.
that is and driving up
Should we go outside?
Inflation a bit. And
go
the
outside.
question is, are companies then
Come on outside.
eventually be able to pass that stuff through, and then that might drive inflation up a little higher. So we've been watching this since the beginning.
I should actually wrap
Half
up
our
the stream
mandate
now.
is inflation.
I gotta do
And would say
some
that-
work, do
that
some
the
recordings,
pass-through to consumers
some
has
videos.
been later
WCAT.
and less than we expected. How much of that will continue, I don't know. But the responsible thing from our standpoint was to watch and wait, because it's our job to make sure we don't make a mistake on inflation.
Well, that was my question. Do you imagine that is going
This
to change,
close is gonna
where,
look pretty bad, actually.
The cost of tariffs will be more deeply embedded and passed on to the consumer. What do you foresee as?
So our forecast, and I think almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year.
How are the birds doing?
Into next year.
The peacocks?
Yeah,
No, they're fine. They're just peacocks, man. They do whatever.
One-time increase from the tariffs will be done, and you'll be back to the non-tariff related inflation, which should be much closer to our 2% goal. That's almost everyone's base case. It's actually our job to make sure that that's the outcome, though. So we can't be in a situation where we're just going to.
Oh, it's so sunny, bro.
We have to be. We can't leave that part of the goal unguarded. And so that's why we've been careful about cutting. We didn't want to cut too early. I mentioned in my remarks, we cut too early, we may find out in a year that inflation actually wasn't under control and it's back up to 3.5% or 4%. No one thinks this is the base case, but that's the risk of cutting too early or too much. Of course, the risk of cutting too late, as I mentioned, is that we unnecessarily, the labor market weakens unnecessarily. There's no risk-free path, and it's a very difficult policy environment when your two goals are telling you two different things. You've got to make a compromise, and we really, again, haven't been in that situation for many, many years. It does happen, but it's happened now, and we'll manage our way through it. But we sort of have to look at both of them as equal. We can't just say we're going to do this one and not that one, unless this one is clearly a greater risk. And now they're coming into closer balance, I would say.
Yeah, birds
we
eat.
do see meaningful.
Yeah, I planted some cabbage like months ago, and it started sprouting, and they ate it all. They do it every year, man. They just eat my veggies. I can't plant anything. I gotta put up a fence or something.
Much lower supply for workers. It's a really unusual kind of a balance, if you want to call it that. But nonetheless, we think it's downside risk.
Well, if you could elaborate, what are some of the factors that is?
I mean, this is not great.
To, depressed demand for labor.
So depressed demand for labor, based on surveys and talking to people who are doing hiring, a big chunk of it is.
I'll probably put a stop there.
They're just unsure about what to do. Businesses, and I'd love to talk to people after this. Businesses don't want to do a lot of hiring. They may be postponing major capex, major initiatives, major acquisitions, and maybe they'll replace workers who retire, but they're not looking to grow. This isn't every company and every part of every.
We'll do like that. Put some stops.
Kind of at the margin. That's got to be part of it.
We'll
put a scarecrow instead of fence. Suggestion from a farmer.
I think that's,
Order
that's
filled.
the demand.
Oh
side.
shit!
Supply
I fucked
side,
up
of
that.
course, has a lot to do with immigration policies.
I accidentally closed that by accident.
Immigration was at a very high level for 2 or 3 years.
Well, let's just re-enter.
Before this year, And
Order
now
filled.
immigration has really gone close to zero, and immigration is not really contributing to the labor force growth now.
We're gonna on
it's
this
been most
on
of
this
what the labor force growth
challenge.
was.
I'm just gonna
And now,
DCA.
so at the same time, you've got declining
We're just gonna
demand
DCA into it.
and also declining supply of workers, of new workers.
Play a slightly different
One of
strategy.
your passions is demystifying the Fed. You enjoy speaking about it, and those that are Fed watchers are wondering.
Risk
you know,
$100
will there in
ish on
fact
this,
be
I think.
2 additional rate cuts before the end of the year? Of course, we're uncertain about that, if I understood your comments correctly. What does it mean to demystify the
100
Fed,
on each,
and
yeah,
what can
be
each
fine.
of us in this room do
We might
to
get
be
swapped out.
better Fed watchers for the benefit of our own businesses, if you will?
So not so many years ago, maybe 40 years ago, and for a long time before that, the main theory of central banking was to be mysterious and obscure. In fact, Montague Norman, who's a very famous former head of the Bank of England, but
I'm gonna close out this
ending in the middle
stream
of
because it's super gay. Yeah, if they don't rally off right there, then we'll want to get out. And the next level down is these 4-hour levels here, right? So I'm relatively bullish though, because they are buying off that 1 hour still. And this is a zone that, you know, they could just be pulling liquidity below, right? Perfectly fine by me. I'm going to wrap up the stream there. We'll see you guys tomorrow. I'll let you know on the Discord what ends up happening with my trades. But I got to do some work. I can't just sit on stream all day, unfortunately. I would if I didn't have 3 jobs, 4 jobs, whatever it is. Okay.